Good evening and welcome to the Cbus and Media Super Annual Members Meeting for the financial year 2023-2024. My name is Marianne Walker and I'm the Chief Member Officer and Deputy CEO of Cbus. I'd like to start by acknowledging the traditional owners of the land. Our members and projects touch many parts of country where members and elders of the local Aboriginal community have been custodians for many centuries. We acknowledge their living culture and their unique role in the life of these regions. I'd also like to acknowledge that wherever you are zooming in from today across Australia, we are all on traditional lands and pay my respects to elders past and present. I'd also like to acknowledge all other cultures we have present here today. This is our 5th virtual annual members meeting. We look forward to our annual members meeting every year, and not just so that we can report to you, but it provides us a valuable opportunity to hear your views and ideas. Tonight, you will hear from our Chair, Wayne Swan, our Chief Executive Officer, Christian Fock, and our Chief Investment Officer, Brett Chatfield. Finally, I'd also like to acknowledge Cbus board directors and other executives who are in attendance. Tonight, we will take you through the year's key highlights, and we encourage you to ask questions via the Q&A box at the bottom of your screen. And we will try to get to all questions tonight, but if we can't, we will reach out to you directly in the coming days via the email that you used to register and to provide you with the information that you've requested. We'll also post questions and answers, or answers to those questions asked tonight on our website, and together with a record of this meeting. We are unable to provide any personal financial advice in this open forum, but as I've just said, we can and will follow these up with you directly. Our presentations do not take into account your specific needs, so you should look at your own financial position, objectives and requirements before making any financial decisions. And of course, any reference to performance of investment products offered by Cbus and Media Super is not a reliable indication of how they may perform in the future. I will now introduce Wayne Swan, Chair of Cbus, who will provide some insights and highlights of the year. Thank you, Wayne.
Thanks very much, Marianne. This year, Cbus celebrated our 40th anniversary. For 40 years, we've been at the forefront of Australia's retirement system, putting members at the centre of our plans. Superannuation has provided every Australian worker with a slice of the profits their labour generates. And because of that, super fund members are retiring with a better quality of life than anyone could have imagined 40 years ago. It's thanks to our founding members and their struggle that we have superannuation in this country. Today, Cbus is one of the fastest growing and top long-term performing funds in the country. From the first contributions of just $11 a week to managing a collective wealth for members of around $100 billion, our success has always been in our connection to our members. From inception to the 30th of June this year, the fund has returned an average annual return of 8.87% for 40 years. That's a tremendous achievement, and one that is making a real difference in retirement for members. As an example, a member with $100,000 retirement balance on the 1st of July 2004 would now have approximately $436,000, excluding fees and costs, in their account if they have chosen the default growth MySuper investment option. What an achievement in just a 20-year period. We're a long-term investor and a top performing fund over the long term. Indeed, among the top 5 performing funds, be it over 10 years, 15 years, or 20 years. And we continue to have one of the most innovative and professional investment management teams in the business, led by Brett Chatfield. Over the last 7 years, our hybrid investment strategy, with a focus on bringing management of more investments in-house, has saved more than $1 billion in investment fees and costs for members. Our investment costs have reduced over the last 5 years, despite nearly doubling assets under management, and are now among the lowest of our peers. Last year, the fund reported to this meeting on delays to our insurance claims handling and the steps taken to remediate and compensate affected members. Once again, I want to apologise unreservedly to the members and families impacted by these delays and to the members of the fund as a whole. To that end, 80% of impacted claims have now been resolved. Our compensation program is rolling out and we have a determined effort to address these matters. We have taken steps and are continuing to take steps to improve service standards and claims processing, including by, first of all, uplifting resources in the insurance contact centre, uplifting resources in the claims team to respond to members and their families quicker. The steps taken to date have resulted in improvements such as call responsiveness in the insurance contact centre, claims experience through access to dedicated case managers, and a reduced backlog of claims. We do need a major rethink by the whole industry and all participants, including regulators and governments, to ensure the system is fit for purpose for the growing number of members entering retirement. The industry fund sector has a proven track record in terms of generating strong long-term financial returns for members. 2.5 million Australians will retire over the next decade. They deserve a system that's easy, hassle-free, and puts them in a strong financial position by default. Cbus has been a strong proponent of common sense changes to make life simpler for members, and in 2025, we will continue to do so. Developing a world-class retirement system for all may sound simple, but it's a big goal and one that everyone in Cbus is united around achieving. We want our members to have the confidence to retire safe in the knowledge that Cbus is doing its best for them. It's members' money and we want to help them enjoy it in their retirement. Please be assured that the Cbus board has a laser focus on making sure the fund is on the right strategic path to put us back at the forefront when it comes to member services. We recognise that as the system matures and more people retire with years of superannuation contributions in their nest eggs, we must do more to assist members transitioning to and in retirement by providing advice products and assistance that helps them optimise their options. We are committed to updating our members annually on the improvements we're making to the retirement journey for them. We also remain committed to ensuring Cbus's governance frameworks align with regulatory requirements. On the 13th of August this year, the Australian Prudential Regulation Authority, APRA, imposed additional licence conditions on Cbus to address concerns regarding fitness and proprietary processes and fund expenditure management. The fund is working constructively with APRA and cooperating with the independent reviewer. As the fund has consistently stated, we're working to further strengthen our processes and frameworks in our members' best financial interests. In August 2024, directors Dave Noonan, Rita Malia and Jason O'Mara left the board, and we thank them for their dedicated service to the fund. Following their nomination and subsequent fit and proper assessment, we have just welcomed Jason O'Mara back to the board, together with new member directors Paddy Cromlin and Lucy Webber, who will bring a wide range of skills and a wealth of experience as the fund continues to grow. Finally, we acknowledge the hard work of the entire Cbus team this year and support the CEO and the executive team in ensuring they all continue to live the Cbus values, keep earning the trust that our members have in us, and delivering them the best possible retirement outcomes. I'll now hand over to Christian Fock, our Chief Executive Officer. Thank you.
Coming into effect in 2020. Thank you, Wayne. I'm very happy to present a summary of Cbus's achievements in this, our anniversary year. Our 40th year has given us cause to reflect on our history, but also to look at how we can continue to build the fund. We strive to build on the foundations laid by those who established the fund to deliver the best retirement outcomes for our members and continue to be the leading specialist fund for our chosen sectors. To this end, during financial year 2024, we've focused on rectifying the service delays members and their loved ones experienced with insurance claims. We've continued to enhance our investment capabilities alongside our commitment to responsible investment. We've invested in and expanded the service and technology platforms of most value to members. We've upgraded our systems to keep our members' data protected and safe. We've advocated for optimal retirement settings for our members who have an atypical path to retirement. And with new regulatory requirements coming into effect in 2025, we will continue to strengthen, enhance and embed our risk and compliance capabilities. Before I get into any further detail this evening, first I need to say this. This presentation contains general information only. It does not take into account your specific needs, so you should look at your own financial position, objectives and requirements before making any financial decisions. Any reference to performance of investment products offered by Cbus is not a reliable indication of how they may perform in the future. So let's take a look at the highlights for 2024. As one of Australia's largest superannuation funds, we provide superannuation and retirement income stream accounts to over 900,000 members. And as at 30 June this year, we were responsible for managing over $94.7 billion of our members' money. The Cbus My Super investment option delivered a return of 8.35% in the last financial year, which takes our average annual return since inception to 8.87%. In this last financial year, our funds under management increased by over 11%, recognised by Chartwest for 5 years in a row as the best specialist fund. We are proud to provide products and services tailored to our members. Whilst we faced into some headwinds in the early part of the financial year, when conditions eventually did return, we made strong headway, returning close to our 40-year average of 8.87%. Our 10-year average is 7.73%, and we are a top 5 performing fund over the past 10, 15 and 20 years. Here is a snapshot of some key stats for the last financial year. We paid $2.7 billion to members in member benefits. $384 million was paid out to members and their families for insurance claims, and our insurance claims acceptance rate for the last 3 years sits at 96.8%, which is above the industry standard. We have seen an increase in the average member super account balance, which is up by over 9%, and an increase in members joining our super income stream product of around 7.5%. Since 2017, when we commenced our investment internalisation strategy, we have delivered $1 billion in member investment fee savings, resulting in a cut to investment fees by almost 50%. The number of members using Chatbot has increased by 100%, whilst our live chat usage has gone up by almost 50%. Both these channels were introduced 3 years ago and are available through the member online portal. As more members become aware of them, more members are using these channels to get the information they need when they need it, day or night. And our members have given us a satisfaction rating of 7.5 out of 10, which is a slight increase on last year. Unpaid super is a major issue affecting many workers in the industries in which our members work. And we have recovered nearly $200 million in unpaid super on behalf of our members in financial year 2024. This represents an increase of 57% from the last financial year. We have been a leader amongst super funds in this work. Most funds do very little or nothing to assist members to recover unpaid super. It's worth noting that in the last 5 years, we have recovered more than $600 million for over 665,000 members in unpaid super entitlements. The Cbus Super Payment Checker app continues to help members check their payments, and we have had 33,000 searches on the app last year, which is up 27%. One of the strengths of Cbus's servicing model is our workplace coordinators, which is a differentiator in the super landscape. They provide an invaluable service. In financial year 24, coordinators conducted 3,025 workplace visits and events and received a member satisfaction score of 9.9 out of 10, an increase on last year and an almost perfect score, which is a testament to the value of their role. Last year, there were 14,335 one-on-one interactions to assist members with all aspects of superannuation, including visiting members in hospital or in their homes to assist with TPD and death claims. Our front counters, another unique service we offer members, achieved a satisfaction score of 9.3 out of 10 by the 9,239 members who visited our front counters last year. The increase in numbers of members visiting our front counters in 5 capital cities shows the preference members have for in-person service. As for our education sessions, we held 58 retirement planning webinars and 299 super education sessions. The number of both of these initiatives is lower than last year, but we had a higher number of attendees, with 3,127 attending the retirement sessions and over 10,000 attending the general superannuation sessions, which is an increase of more than 3,000 in comparison to the previous year. Another high score was given here, with the members rating the education services 9 out of 10. Last year, we paid out 3,633 insurance claims worth a total of $384 million to the members and their families. Another critical point of difference between Cbus and most other funds is that we offer default insurance in our manual category. We offer this to protect our members in the dangerous and hazardous work that they do. Since April 2020, when Cbus successfully advocated for the dangerous occupation exception to the Putting Members' Interests First legislation, ensuring the fund could continue to offer default insurance for young and low balance members, a total of 236,460 members have either retained insurance cover or have been provided automatic cover. And between 1st of April 2020 and 30 June 2024, 846 claims have been lodged, assessed, approved and paid to these members or their families, totalling $106.9 million in benefits. It should be stated that without the dangerous occupation exception Cbus advocated so hard to secure, this amount would have been zero. So by all means, the dangerous occupation exception is both successful and necessary for our members and their families. We have also recently introduced the insurance loyalty rebate, which will benefit more than 260,000 of our members. Eligible members will receive an insurance premium rebate of either 2% or 4%, depending on their tenure. This is to acknowledge the long-term commitment our members have to Cbus. If you were a member of the former Media Super Fund and became a member of Cbus on the 9th of April 2022, we'll determine your eligibility using the date you originally joined the former Media Super Fund. Likewise, if you were an accumulation member of the former EISS Fund and became a member of Cbus Super on the 12th of May 2023, we'll determine your eligibility using the date you originally joined the former EISS Fund. On advice, our in-house advice team held 19,929 conversations with members and more than 1,024 referrals were organised for members to financial planners through the Cbus and Financial Advice Association of Australia member referral program. Members who used the advice over the phone service gave us a score of 8.5 out of 10. For the next financial year, we are introducing 2 new advice initiatives in order to meet our members' needs. Under our Advice Essentials Plus program, the fund will offer the provision of advice to members and their partner or spouse on a household basis for a fee, so as to consider the financial situation of the household rather than just the individual member, to better support members and their loved ones to make informed decisions around their retirement. The second initiative is our proactive outbound advice service, contacting members who are nearing retirement age to start the discussion on their retirement plans and needs. We will report on the progress of these initiatives next year. As we reported last year, some of our members and their loved ones experienced delays in the processing of insurance claims. Last year, the key program of work Cbus undertook included uplifting resources in the Insurance Contact Centre to improve service standards, building resources in the claims team to respond to members and their families more quickly, including doubling the size of the case management team at our third-party administrator. We've developed key competencies in our contact centre so staff can have more meaningful and productive interactions with our members in order to assist them more efficiently, and reducing the backlog of claims. There is new leadership across the Cbus claims operational team at our administrator, and we have increased our complaints function to deliver ongoing targeted intervention across insurance claims. We have made changes to our website to make information simpler for members and people making a claim. And we introduced a simplified ID process to minimise requirements on claimants that had experienced delays in claims processing. All of this is focused on delivering improvements to reduce waiting times in the Insurance Contact Centre and deliver a better claims experience. We also commenced a compensation program for affected members and claimants, which is continuing into this financial year. As you may be aware, the regulator ASIC has recently commenced legal action against the trustee for its handling of these issues. The fund has cooperated with ASIC during its investigation and is seeking an alternative dispute resolution process to avoid protracted litigation. In respect of the claims themselves, I can confirm that over 80% of the claims involved in this action have already been resolved. And these members and their beneficiaries have so far received $755 million in benefits. Before I hand it over to Brett Chatfield, our Chief Investment Officer, I think it's important to point out that we are an award-winning fund. Cbus is honoured to be recognised with these awards, which highlights the quality of Cbus's products, performance and service. A particular call out this year is our recognition as Specialist Fund of the Year by Chartwest for the 5th year in a row. We are also particularly proud to have received the Best Fund Responsible Investment Award by Chartwest for the very first time. This is a testament to the hard work of our fund to embed our responsible investment principles across the portfolio as a key driver in delivering members the best possible retirement outcomes. So with that good news, I will now hand over to Brett, who will give an overview of our investments for the year.
Thanks, Christian. With our latest 5-year strategy approved in early 2023, we remain focused on being an innovative, global, long-term investor with total portfolio expertise and investing in the real economy. Our commitment to invest in the best financial interests of our members remains unchanged as we've grown and our investment approach has evolved. Having a differentiated hybrid approach means we invest wherever the best opportunities are, whether we manage it internally or through external investment managers, and we partner with global investors on significant investments for our members. From being a pioneer in the unlisted property space through Cbus Property to our expansion into unlisted infrastructure, both in Australia and offshore, we have leveraged our experience in the built environment and in unlisted assets to generate very strong long-term returns for our members. Our internal investment team has continued to contribute to our broader understanding of investment opportunities and risks as we gain insights from sectors, countries and regions from our various investments. I've been very focused on continuing to build out a very high-performing team. Some of our more recent hires include former Australian Super Head of Equities and VFMC Chief Investment Officer Justin Pascoe, property expert Nikki Pangolopoulos, and infrastructure energy expert Angela Ruchin. Approximately 34% of our investment portfolio is managed internally, and we expect this to grow towards 50% by 2028. Our internalisation strategy has also contributed to reduced investment fees and costs. Investment fees have reduced by 46.3% since 2017, which equates to savings to members of over $1 billion over that same period. Data and technology are key enablers in involving the differentiated hybrid investment model at scale by helping teams to work more efficiently and make better investment decisions to deliver enhanced returns and to manage risk. Responsible investment is considered across all asset classes and helps us manage risks, but also presents us with opportunity through areas such as investing in the climate change transition and the energy transition. We also closed out our third climate change roadmap, continue to embed and integrate ESG across the portfolio, and were again recognised as an ESG leader in the industry. I'll also cover this area in more detail shortly. We are always focused on outcomes, clearly the key one being to continue to deliver strong risk-adjusted net returns for our members. And we have delivered a 7-year investment return of 7.15% per annum, exceeding the CPI objective of 3.25% per annum above CPI by 0.62%, and an annual return to 30 June 2024 of 8.35% for our growth MySuper investment option. Most importantly, from a long-term perspective, our growth MySuper investment option is in the top 5 performers over 10, 15 and 20 years according to the Super Ratings survey to 30 June. Cbus has seen significant growth in members' funds under management over the past decade, and from just over $20 billion in members' funds a decade ago to $52 billion 5 years ago, and now just a few years later, we are fast approaching $100 billion. This is up by 11% from the previous year, making us one of the fastest growing funds in the industry. It is with great pride and thanks to our more than 900,000 members for placing their trust and retirement savings with us that we have continued to grow. This growth has been built together with our members, employers and in sponsoring organisations, and is driven by our mission to secure the long-term financial well-being of our members in retirement, and by being true to our specialist fund foundations in how we deliver value. The benefit of this size is that we have economies of scale which allow us to not only take advantage of significant investment opportunities, particularly in private markets, but also, as I touched on the previous slide, it also enables us to continue to reduce our investment costs. I want to talk a little about how we invest and where we invest. Cbus does not just invest in companies on the Australian and international stock exchanges, but we also invest in direct assets such as buildings, shopping centres, and essential infrastructure that we all rely on, like roads, airports, and energy assets. We also have a unique strength at Cbus, which is the rich knowledge and understanding that our board and industry partners bring to the fund about their industries. We will continue to invest in the built environment, in the energy transition, and through innovative pathways into other parts of our members' industries. In April 2024, our internal debt capability celebrated its 5th anniversary. Through our internal capabilities, we have lent more than $1.6 billion to a variety of Australian businesses, provided loans for the construction of more than 1,500 apartments, including for social and affordable housing development in Victoria, and most importantly, all this activity has contributed strongly to our performance. Linda Cunningham, our Head of Debt and Alternatives, was named Industry Thought Leader of the Year at the Super Review Super Fund of the Year Awards recently. This award acknowledges the pioneering work led by Linda, finding scalable ways for institutional investors like ourselves to support the delivery of new social and affordable housing whilst continuing to deliver very strong returns. Linda was recognised for contributing to creating distinctive debt structures that result in continuing institutional support for this vitally important issue. We continue to support our Media Super members in the media, print, entertainment and arts industries through our ongoing loan facility with Fulcrum Media Finance. Fulcrum provides access to pre-sale advance loans for film and TV productions, such as recent productions including premium drama series Fake and season 3 of hit comedy series Fisk. We are working with governments and our industry partners to identify further opportunities to invest in Australia's energy transition and have invested more than $750 million in several wind and solar energy opportunities in Australia and overseas. We also have approximately $1.2 billion invested in energy transmission and distribution assets here in Australia that will play an integral role in Australia meeting its net zero emission targets. Cbus has a long history of leadership, recognition and continual improvement in responsible investment. Our investment decisions aim to consider material environmental, social and governance, or ESG, risks and opportunities so we can achieve our primary goal of generating very strong, sustainable, long-term returns for our members. We have identified several key areas of focus: investing in the real economy, nature and biodiversity loss, modern slavery, and workplace health and safety. These priorities generally represent a systemic risk to our portfolio, are the subject of regulation, or are closely linked to our members and the industries in which they work. Our focus in managing climate change risk continues to evolve, ensuring we minimise risk whilst also maximising opportunities and supporting the transition to a low-carbon economy. And we have a set of public goals that aim to support this transition and to limit global warming. We continue to advocate for clearer, more consistent disclosure standards from companies and investors around climate change to ensure greater transparency and accountability in actions taken to mitigate its impacts in line with the Paris Agreement. We have invested in several wind and solar energy opportunities in Australia and overseas, and examples include the Star of the South here in Victoria, Australia's most advanced offshore wind project. We believe that nature and biodiversity loss present significant risks to our portfolio, our economy and society, and we have developed an initial roadmap which contains strategic actions to guide our work. We also report against the Modern Slavery Act, which aims to increase business awareness of the risks of modern slavery in the production and supply chain of Australian goods and services, and work to minimise the risk of modern slavery in our operations and supply chains. Safety disclosures and practices provide insights into a company's operational performance and culture. We consider the financial impacts that unsafe workplace practices can have on companies. I'll now talk a little more about Cbus Property. Cbus Property continues to build on its strong position, having grown its portfolio from around $500 million in 2006 to $6.6 billion in 2024, with a further $4.8 billion of work underway. The property industry has had a challenging phase, but we believe we are moving through that and remain keen to identify long-term opportunities to take advantage of this. Cbus Property has a high-quality, diversified portfolio and has delivered an average return since inception of 12.92%. Our $1 billion Bates Smart Design commercial office tower at 435 Bourke Street in Melbourne CBD is under construction, with anchor tenant Commonwealth Bank and law firm Baker McKenzie. Hospitality entrepreneur Chris Lucas will underpin the hospitality precinct with 2 new signature dining venues that integrate all-electric cooking with Cbus Property's solar skin facade, one of the world's first. Cbus Property has also received approval from the Victorian Department of Transport and Planning for a circa $350 million residential development on St Kilda Road. It's our 4th partnership with Bates Smart in Melbourne, encompassing 77 residences across 17 levels and premium residential amenity. Highlights for Brisbane include 443 Queen Street, which was named a dual winner in the Global 2024 Council on Tall Buildings and Urban Habitat Awards of Excellence, and a finalist in the 2024 World Architecture Festival. In Sydney, Cbus Property's purchase of Dexus's 50% interest in 5 Martin Place has taken our ownership of that asset to 100%, an investment in the Sydney CBD featuring industry-leading environmental credentials. There is also the 3rd and final stage of the Newmarket Randwick Master Plan in Sydney's eastern suburbs. Meanwhile, 111 and 121 Castlereagh Street is under construction, with 60% of the residential component sold and the commercial office component due for completion later this year. Cbus Property benefits greatly from the fund's closeness to the construction industry, from the intelligence we have on the ground, and through the industry in which our members work. There is a double benefit in investing back into our members' industries, creating economic activity and jobs, while contributing very strongly to long-term returns for our members. Thank you.
Thank you, Brett. We'll now move to the question and answer part of the meeting, and we've received some questions from members already, and we often receive personal style questions from members in the lead up to and during these forums. So for those received prior to tonight, we've tried to reach out to members to address their personal queries directly, and we will, however, share the themes of those questions and respond as best as we can without delving into personal details. And all the answers to all the questions will be available on our website in due course. Now, the first group of questions are from members seeking advice to make the right decisions for their retirement. So I want to remind everyone watching tonight that you can contact our free advice service Monday to Friday, 8:30 a.m. to 6 p.m. and it's on this number, 1300 361 784. It's to discuss any of your personal circumstances. Our team is there to assist you with all your super inquiries. The first question from Anthony, Marie, Rose and Raymond, they want to know how much people can put into super each year. So we can only answer this question in general terms, as there's many factors impacting individual members that need to be considered in determining this and how much they can contribute, including their age, how much, as I said, can contribute, their account balance and what type of contribution they intend to make. So in general terms, the before tax contribution limit is $30,000 for the 2024 and 2025 financial year. A member can make personal contributions up to the age of 75, and only downsizes and mandated employer contributions, and for example, that's the super guarantee, which currently sits at 11.5%, are allowed after you reach the age of 75. So personal contributions can be made on both non-concessional, that's after tax, or concessional, which is before tax, on a concessional basis. So the non-concessional contribution cap is $120,000 for the FY 24-25 year. And a member aged up to 75 may also be eligible to utilise the bring forward rules. So the bring forward rules enable a member to contribute up to 3 times the non-concessional cap limit in one financial year. And this represents the next 2 financial years and the current FY 24 and 25 year cap limit. So the ability to utilise the full $360,000 bring forward amount is subject to the member's total super balance being below $1.66 million as at the 30th of June 2024. So if a member's total super balance is $1.66 million and above, this will reduce the amount of that a member can contribute to their super, reducing the zero if their total super balance as at the 30th of June 2024 is 1.9 million or above. Now we go to some questions related to insurance, to member services, administration, fraud and ID, and super rules. So on the insurance question, we're asked by Caleb about the clarity and accessibility of insurance in super and why it's so complex. So we do understand that some members may find the insurance process complex. Every claim is different, and to comply with regulations and policies, there are certain requirements that need to be satisfied when a claim is made. And we've updated our website to help members through the insurance claims process so they can be better prepared when beginning an application. And also our insurer performs a due diligence check to ensure that members have met their obligations. And this can take some time as some claims are complicated. And we're proud of our insurance offering and the fact that over the last 3 financial years, we've accepted 96.8% of all claims. This is high. This is a very high acceptance rate of member insurance claims. So to the next question, we're asked by Sharana, what happens to insurance if I disconnect income protection if I used to have it previously? And what about changes in death cover units? So if you had income protection and it was discontinued, you need to reapply for it. Cbus's insurer would need to assess and approve your application, and we provide death and TPD cover in multiples of units. So the value of a unit will change over time based on a member's age, and 4 units of cover is the default cover, but members can purchase more. Now, another question on insurance. We've been asked by Paul whether there are plans to bring insurance claims processing in-house given the failure of Link. We are looking at all options regarding the administrative functions of the fund in order to deliver a better experience for our members. And as we've outlined in our presentation, we've increased resources in the Insurance Contact Centre. It's really to improve service standards, to expedite the processing of payments to members and their families as well. And bringing this function in-house is not something that can happen overnight, and needs to be carefully planned and considered. Members can be assured, though, that these are matters of high priority for the Cbus board and our executive team. We've got another question here from John. He seeks information about statements and when will the latest statements for retired members be sent. Some members for those with retirement accounts were delayed and sent on Wednesday the 20th of November, and we needed to ensure the statement accurately reflected their account. Our next few questions relate to fraud, security and ID, and we're asked by Dennis about security of savings, fraud and scams. How easy is it to gain access to Cbus accounts online? And he also referenced the use of security questions when speaking with our team on the phone. So our fund has invested heavily in security and technology over recent years. We want to assure members that we take the security of their accounts seriously and we act with an abundance of caution when it comes to securing members' money. And our member portal, in that portal, there's multi-factor authentication. It's required to perform several functions, and that's including updating your contact details, updating your consent to use ATO Supermatch services, completing online withdrawals or changing payment details for fully retired members, and changing or resetting your online password. We continue to monitor security closely. Members should be assured that we will never ask you for your online password over the phone. As for the option to add a verbal security password to your account, this is actually available to members. You can find more information at our website, www.cbussuper.com.au/supersafe. So for further resources to avoid scams and identity theft, you can also head to the federal government's Stay Smart online website. On a similar theme, we're asked by Douglas, when sending applications for benefits by email, can I get an electronic confirmation that it has been received? This member also wants to better understand the processes we undertake around the security of member data with third-party vendors the fund engages. Cbus closely manages information security risks. To comply with APRA's regulation CPS 234, all vendors and partners undergo a cybersecurity assessment before they're contracted. Additionally, the fund has an established information security policy and a dedicated security standard for third-party risk management that defines key aspects of the process, including end-to-end oversight. And these steps assist with us ensuring that third-party providers have robust systems to protect personal member data, aligning with industry standards and regulatory requirements. All members should receive a confirmation email upon receipt of any correspondence to the fund. Occasionally, an email may not have gotten through due to technical problems, but we're investigating the issue you've raised and we'll contact you once we have a better understanding of what occurred for you. Our next question is from Jennifer. It's about retirement product, and we're asked, what is the value of the income stream versus setting up your own direct debit from savings? So some of the benefits of investing in a Cbus super income stream, and we call that a CIS account, compared to withdrawing all your super savings into a bank account, include things such as tax benefits, investment choice, there's income stream tax refunds and flexibilities. And I'll give you some examples. So for tax benefits, for members invested in the CIS fully retired account, there's no tax on investment earnings. So in contrast, any interest earned on a bank account outside your super fund may be taxed. For members aged over 60, there's also no tax charged on the income payments you receive from a fully retired account. When it comes to the investment choices, the Cbus SIS account offers a variety of investment options to suit you, from the default conservative growth option to your choice of direct assets, where you can tailor your investments to suit your needs and interests. And this includes several investment options designed to provide investment returns above inflation over the long term, which could help your money last longer in retirement. When it comes to income stream tax refund, if you're using an existing Cbus or transition to retirement account to start your SIS fully retired account or income stream, we will refund money we've held from your account that would have been paid as tax. And this refund would be paid directly into your account. And the flexibility to make withdrawals at any time once you've actually opened a SIS fully retired account. There's no limit on the number of withdrawals you can make each year or a maximum amount. I should note, however, that members invested in a SIS transition to retirement account cannot withdraw more than 10% of their balance per year. So that brings me to the end of the questions I have right before me now. I will call upon our Chief Investment Officer, Brett Chatfield, to come back to the lectern and continue the Q&A session, answering questions received about investments related topics, before then asking our CEO, Christian Fockback, to respond to questions further. Thank you, Brett.
Thanks, Marianne. To begin, we've received a question from Wahid that asks, please advise which super option will give the highest return. So choosing an investment option within super can depend upon several factors, such as your tolerance to risk, your investment time frame, your stage of working life, and your personal financial circumstances, goals, and objectives. Generally, investment options with higher growth assets, such as Australian shares and international shares, have a higher return over a longer time frame, but come with higher risk, including the potential for meaningful short-term drawdowns. Whereas investment options with more defensive assets, such as cash and cash-like assets, have a lower return, lower risk, and a shorter investment time frame in comparison. Our advice team can help you understand your super investment options and offer advice on choosing the right investment option for you. The next question comes from Roy and asks, in the current economic conditions, with most growth-leaning assets being fully priced out, if not overvalued and at all-time highs, is there a plan to rebalance the asset allocation within the premixed options to ensure that the likelihood of negative returns are minimised? So our strategic asset allocation, or SAA, provides guidance for the portfolio allocation over the medium to long term, so 10 years plus, based on what we believe is the most likely to meet each option's investment objective, including the real return targets and frequency of a negative return, and is reviewed annually. Dynamic asset allocation, or DAA, is an additional source of active return and is used to make shorter term 6 to 12 month adjustments to the SAA based on our outlook for markets. Taking a longer term view, we have slightly lowered our expected equity market returns for the next decade based on the higher valuations that we're starting from. But it's important to highlight that our portfolios remain diversified across a wide range of asset types, and overall, we continue to remain on track to meet our investment objectives. Our diversified portfolios are also designed to enhance returns per unit of risk and smooth member experience from short-term market volatility. By investing in a range of asset classes, it reduces the impact that any one asset class has on a member's returns, and the risk of a large fall in your account balance is reduced. Currently, over the shorter term, the dynamic asset allocation strategy has the growth option modestly overweight equities, although this position was recently trimmed following strong market performance and an increase in uncertainty following the US election result. It's true that markets have performed well and valuations are elevated, particularly in certain markets, but that is not usually a good short-term indicator of market performance, and the fundamental backdrop remains supportive, especially now that most central banks are cutting interest rates to support the ongoing economic expansion. We were also asked by Roy, where can I find the complete list of asset holdings and specific allocations within the premixed investment options, not just the top-of-the-line strategic allocations within the handbook? So we publish where each investment option invests in detail for the 31 December and 30 June every year. The way information is shown is set out by regulations. Some investments will have an individual value and percentage. Some will be grouped with a total investment and percentage amount shown. Values displayed for each investment option at that reporting date. This information will give you a good level of detail on individual companies that we invest in, unlisted assets, and cash and fixed interest holdings. This information is available on our website, www.cbussuper.com.au. And the next question asks, we are living longer and inflation is chipping away at yields. Will there be a plan to shift super into some form of income generating vehicle rather than a nest egg in the near future? So superannuation is governed by legislation that requires us to invest on members' behalf for the purposes of their retirement. We are not aware of any move to change this in the near future. In our portfolio, we have a mix of growth-oriented investments as well as those that are predominantly income-based. In addition, our default option within the retirement phase is lower growth with a greater allocation to more defensive income-oriented strategies. Our next question from Michael goes to net zero commitments and asks, how is Cbus performing to reach its net zero ambitions? What measurement tool is Cbus using to measure its net zero performance? Is that tool independently verifiable? And how often are you reporting the results to members? So within our climate change strategy, we have a set of public climate change goals and climate change principles, and have used climate change roadmaps to identify key actions we aim to achieve within a set period of time. As well as our net zero portfolio emissions goal by 2050, we also have a 45% reduction in real-world emissions by 2030. Each year, we report on our progress towards these goals. We use carbon intensity as the tool to track our progress rather than absolute carbon emissions, because this allows us to account for growth in our portfolio over time. In FY24, we recorded a 34% reduction compared to our 2019 baseline. When we adjusted for growth in asset values, enterprise value between financial year 2019 and financial year 2024, our reduction in carbon intensity was 18.3%. We believe this is a better representation of our real-world impact, the actual reduction in emissions achieved by the assets in which we invest, and this is consistent with international standards. Overall, we are on track with our targets. We publish our progress each year in our Responsible Investment Supplement, which forms part of our annual integrated report, which has been independently reviewed and verified through an external limited assurance process. The next question from Jordan asks, how have recent media reports affected performance and investment strategies? Recent media reports have not impacted on our performance or investment strategies. We have over 100 investment professionals focused on delivering the very best returns for members over the long term. I've been here for almost 12 years, and our CEO has been either at the fund or advising the fund on its investment strategy since the late 1990s. You can have every confidence that we are 100% focused on continuing to deliver strong long-term returns, and we believe that our portfolio is very well placed in that regard. The next question from Larry asks, what do you attribute our relatively poor performance last financial year compared to the super ratings fund median? So funds with a higher allocation to listed growth assets, particularly Australian shares and global shares, performed well last financial year. And while we do have significant exposure to these asset classes, we have less than many, for example, retail super funds and passive balanced products, including our own index diversified option, which delivered a crediting rate return of 11.4% for accumulation members in the 2024 financial year. Our growth option has a diversified mix of growth assets across both public markets and private markets, which generally performed well last year, but not as well as shares, especially US shares. Our performance was also impacted by a higher than average exposure to the property sector, which has been a feature of the fund's strong long-term returns. We are of the view that property is stabilising after several years of downward pressure and should be well placed over the long term, given our high quality portfolio and the great expertise we have via Cbus Property and our own internal team. We remain very confident in our long-term investment strategy and the benefits of a broadly diversified portfolio, which includes key asset classes such as infrastructure and property. We expect that will help us to continue to deliver strong returns as we have for the last 40 years. Over the 10, 15 and 20 years to 30 June 2024, our growth option was ranked in the top 5 of funds in the Super Ratings survey. And finally, we've been asked a couple of questions by Sam, Munro and Gary and Rosalind around the theme of Gaza, including how Cbus manages the risk associated with investments in Israeli banks, real estate and insurance companies, and other companies operating in and supplying the Israeli market given the current war in Gaza. And as I mentioned, we have received a number of questions online and this evening regarding conflict in the Middle East and our investment. So firstly, we acknowledge there is significant community concerns over the conflict in the Middle East. It is important also to note, though, that we have the legal and regulatory framework within which we operate as a super fund, and we are subject to a number of strict statutory and general law obligations in the way we administer the fund. These obligations require the trustee to invest the assets of the fund for the purpose of maximising the return outcomes for its members, with the best financial interests of members being the determining factor in investing the assets of the fund. We take our responsible investing activity very seriously, and we've undertaken a recent review of our exclusions. With over 920,000 members, there is the potential for widely divergent views to arise regarding our investment exclusions. And we have recently conducted a member survey and will be undertaking more detailed member focus groups. As part of the member survey, members confirmed they were supportive of our current focus areas, including climate change and workplace health and safety. We also asked our members about our other issues of interest and concern to them, and the key issues raised were the housing crisis and the lack of housing supply, as well as the cost of living. We also monitor the activities and approaches of our major peers. We currently exclude direct investments in companies which have direct involvement in the manufacturing of controversial weapons, specifically cluster munitions, biological and chemical weapons, anti-personnel mines, depleted uranium, and white phosphorus weapons, or the manufacturing of components or services of the core weapon systems where those components or services are considered essential for the lethal use of the weapon. We will also divest where we are required to comply with sanctions imposed by the Australian Department of Foreign Affairs and Trade, or DFAT, and we note there are currently no specific sanctions in regard to this. We have also engaged recently with a wide range of relevant companies, noting that many companies have global operations, to really ensure that we understand in detail their specific activity and the potential risks. We take this matter very seriously, and we will continue to review and evolve our approach. That brings me to the end of the questions I have before me on the investment-related issues. So I'll hand back now to our Chief Executive Officer, Christian Fock, who will continue the session.
Thanks, Brett. To begin, we've received a number of questions about the acquisition and retention of members through marketing, advertising, and sponsorships. There's a few questions on this theme that I'll work through. The first couple of questions from Michael, Rodney, another Michael, and Robert ask why Cbus is spending $28 million on promoting, marketing, and sponsorship if it lowers fees. Where is the research to support this approach? Why you have to advertise on football jumpers, and is it necessary to be spending on marketing for a not-for-profit fund that is the default fund for so many employers? So firstly, we do not advertise on football jumpers or sponsor any sporting teams or clubs. We do advertise during the AFL and NRL seasons on commercial television and radio to promote the fund as part of our brand and marketing annual plan. It's important to point out that Cbus does not have 100% penetration of default status across the building and construction workplaces. Default status is contested. Employers can make their own decisions about what the workplace default fund is, and in fact many funds, including for-profit brands, hold default fund status in enterprise bargaining agreements across the building and construction industry. Cbus has to compete for default status, and we do this through strong industry relationships, investments in our industry, and products and services like insurances that are fit for purpose. In the last financial year, Cbus acquired approximately less than 20% of members through a default enterprise bargaining agreement. It's also important to point out that having Cbus as the default option doesn't mean automatic membership. Everyone has the right to choose their own super fund. There is no compulsion to join a workplace's default fund. The exercise of choice of a super fund outside the default system represents over 50% of the annual joins for some funds these days, and marketing plays a key role in driving this stream of direct acquisition of members. In the last 2 years, this area of member acquisition has become increasingly competitive with the implementation of stapling legislation, which has made the competition for new members more intense, and the increased use of competitor funds of employer payroll platforms such as Employment Hero and Flare to acquire members has added to this competitive environment. Achieving scale in the superannuation market is critical for keeping costs and fees low, and to enable the fund to access a wider range of investment opportunities for members. Because the bigger the fund, the lower the fixed costs are per member, and the more negotiating power it has with suppliers such as investment houses. Advertising plays a vital role in attracting and retaining members in the competitive market. Indeed, recent disclosures by our competitors show significant investment in advertising and promotion across the industry. Cbus uses research and econometric modelling to inform the expenditure decisions across marketing channels and to measure their effectiveness. We routinely review our advertising performance to ensure cost-effective growth. On a related theme, we're asked by Robert, how many new members did Cbus attain in financial year 24? And how many of the new members joined because Cbus is the default option of their employer? So to this, Cbus had over 90,000 new members join the fund in the last financial year. In financial year 24, 18.5% of our members have come through an enterprise bargaining agreement, and this has remained flat compared to financial year 23. This reflects the members who have received a contribution from the EBA employers in the 6 months period. Looking at contributions from EBA employers in the 12-month period, the percentage of accumulation members is 21.2%, slightly up from 20.6% in financial year 23. All this shows just how hard Cbus needs to work to compete in this incredibly competitive environment. A further question from Robert asks, based on last year's promotional costs and new members, how much did each new member cost? The average cost of each new member is commercially sensitive information, so we're unable to divulge this publicly. As I have previously mentioned, achieving scale in the superannuation market is crucial for keeping our costs and fees low. The next theme, we've received a couple of questions from Owen and Philip about one of the fund's sponsoring organisations, which I'll seek to answer together. The questions go to which board directors are CFMEU nominated, and is the administration of the CFMEU affecting the fund? So the CFMEU, of which the construction division is under administration, is one of the fund's member sponsoring organisations, and they hold 3 of the 14 shares in the trustee. These 3 shares are under the control of the CFMEU National Executive, and they advised that its 3 representatives would cease as directors of the trustee in August 2024. So despite these cessations, the board of the trustee continued to have a quorum to be able to operate, and in November, after applying a comprehensive fit and proper persons test, the Cbus board confirmed the appointment of 3 replacement directors which were nominated by the CFMEU. They are Paddy Crumlin, Jason Amara and Lucy Webber. And to find out more information on their skills and experience, please see the governance section of our website. So as a result of the CFMEU entering into administration, the trustee suspended all payments to the CFMEU and entry into any new agreements or arrangements on an interim basis pending further investigation. The only exception to this in respect of certain rent obligations that the trustee is satisfied are at market rates. Other than these matters, the CFMEU being placed into administration has not significantly affected our operations. Indeed, our coordinators and employer teams continue their really important work, engaging with members and employers in their workplaces. A further question from Philip asks, how much has been donated to unions this financial year? Simply answered, Cbus do not make donations. Marketing and promotion of the fund includes partnership agreements with member and employer sponsoring organisations, and these are all done on a commercial basis. Our next question from Karen asks, what is Cbus doing to clean up its act and mitigate the investment risks for member accounts amid both ASIC and APRA action against Cbus and ongoing corporate governance questions around the CFMEU. So firstly, as Brett has mentioned, as far as investment risks, Cbus has a strong investment team that balances both experience and innovation. We have more than 100 investment professionals that oversee global diversified portfolio that helps to continue to grow your super. Our number one focus remains protecting and growing your retirement savings, as we have successfully done over the past 4 decades. On the other matters, we want to assure members that the fund is committed to improving our policies, processes and governance frameworks to ensure that they remain fit for purpose and align with regulatory requirements. To that end, we have cooperated fully with the independent review required by APRA, the report of which will be made public as part of our licence conditions. The proceedings commenced by ASIC in relation to claim handling delays involve complex issues and may take some time to resolve. However, we have consistently cooperated with ASIC and remain committed to engaging with ASIC in a way that seeks to avoid protracted litigation. As I have said earlier, we have been working hard to make improvements in addressing the delays that our members and their loved ones experienced in relation to death and disability claims. On governance, we're asked by Tom, when the investment committee discusses the relationship between ethical investments and investments in weapons manufacturers, does John Edwards disclose that he receives a fellowship from the Lowy Institute, which is part sponsored by weapons manufacturers? So in relation to this, in line with our board and committee processes, all directors are required to disclose affiliations, memberships and conflicts. John Edwards' affiliation with the Lowy Institute is on our website in that section that features our board members. And finally, from Julie, we're asked, what impact will the ASIC case against Cbus have on Media Super? Will Media Super have to contribute to any civil penalties if they are handed out? Was it wise to amalgamate with a fund which has clocked up an estimated $20 million loss? So Media Super merged with Cbus in 2022. We are now one fund. In relation to ASIC proceedings, as we've mentioned before, it's not appropriate to speculate on the proceeding at this time or the potential outcome of those proceedings. Marianne, that concludes the responses to questions I have before me. So back to you.
Thank you, Christian. Now, we have received some further questions that have been posted tonight, so I'll answer some of these now, and then I will hand over to Christian, our CEO, and Brett, our CIO, to answer any further questions. So first question is, why can't members attend this important meeting in person? We are permitted under the legislation to hold this meeting virtually. We've done this over the past 3 years, and because we are a national fund and we have members in every state of Australia, we found that this is the best way to be able to give access to our members and have had increasing numbers come to these sessions. So it really does attest to the effectiveness of having this model online. And next is actually a statement. So we've got a statement from a member who says, "Respect your words and wisdom, Wayne." So we thank you and appreciate your sentiment. Another question, is the online chat facility available for Media Super members? I couldn't find it on the Media Super dashboard. No, unfortunately, it isn't available at the moment, but it is in our plans into the future. But Media Super members can contact us by calling us, email, or by visiting our front counters, and also through our on-the-ground staff who visit our workplaces. And lastly, we have received a concern from Neville. Neville, thanks for raising this, and we will be in touch with you very early tomorrow morning. So thank you for those additional questions. I will now pass to Christian, our CEO, to answer some further questions. Thank you.
Thank you, Marianne. We have a question in relation to the EISS defined benefits. And the question is, are the defined benefit accounts merged from EISS still fully funded? So we conduct an annual actuarial review. The aim of the actuarial review continues to be to make sure that we are funding to a fully funded status. As at the 30 June 24 actuarial review, the plan was funded to the point of 97.9%. That change in funding was as a result of updating of, in particular, some of the assumptions, including salary increase assumptions. And as per the practice that we adopt, there is a plan in place with employers to return the funding status back to a fully funded position at 30 June 2025. Another question I have is in terms of the board members, and it asks whether there would ever be a position open to members not affiliated with the employer and the trade unions. We do want to just highlight that we do have 2 positions that are independent director positions. Plus, in addition to that, the sponsoring organisations have the opportunity and have done, by looking at skills, appointed other directors that are not affiliated with them. Case in point being the chair of the investment committee, Stephen Dunn. That's all the questions that I have, so I'm going to hand over to Brett.
Thank you, Christian. So we have an initial question. Hello, thank you for the chance to ask a question. My question is about climate change and what Cbus is doing to eliminate our contribution to global warming by divesting from all fossil fuels and using our power as large shareholders to force companies to do more to reduce their contribution to global warming. Climate change isn't just an investment risk for our money, it risks the health and well-being of our members, particularly those working outdoors in increasing heat. What investments in fossil fuel companies does Cbus currently have and why do we retain them? By what date will Cbus completely divest from fossil fuels that contribute to global warming? And how has Cbus used our investments to improve the climate performance of our companies we are invested in, and when we haven't supported climate positive votes at investor meetings, why didn't we? So in terms of all of our holdings and our exposures, they're all listed on the website twice a year using 30 June and 31 December data. So that will provide you a full list of all of our companies and all our investments across not only Australia but offshore as well. So all that information is available via the website. In terms of our approach to climate change, there's really a number of dimensions to that. Firstly, we work to ensure that we implement climate risk management within all our investment decision making across all asset classes. So understanding the investment we're looking to make, what sort of longer term climate risk does it have? Is there a risk it ends up a stranded asset? Is it a positive contributor to climate risk management? So those sort of key considerations around climate risk and climate risk management are taken into account when we're making individual investment decisions across our various asset classes. Using company engagement and influence is another key dimension, which obviously is alluded to in the question. Given we are quite a large investor, particularly in Australia, we do use our size to engage directly with companies, and we have a dedicated list of companies that we're currently focused on engaging with that are at the higher emitter companies. We also engage with other entities and groups around similar sort of engagement and advocacy. And we do advocate quite broadly around climate risk management and having appropriate transition plans and transition paths in place. And we engage directly with companies on their progress against that. In terms of some of the specific data, if you like, we've undertaken engagement with a number of partners, but in terms of direct engagement, over the year, Cbus engaged with 17 of the 20 priority climate companies. 88% of these companies assessed have set a net zero by 2025 target covering scope 1 and 2 emissions. 59% were assessed as having either adopted or are considering an advisory say on climate vote. 18% had made good progress during financial year 24. 41% made partial progress and 41% were assessed as having made limited progress. 100% of companies have aligned with or at least partially aligned with this TCFD reporting recommendations. And in regards to questions around, I guess, divestment is always an option and it forms part of our overarching framework. But in general, simply one investor divesting from an individual security doesn't have a significant sort of impact. Research suggests you need effectively close to near complete divestment to have that sort of impact. And our preference, though, is to avoid divestment where we can engage effectively with companies and we can work with them to ensure they are on the right path, rather than simply divesting. It's a much more effective way to engage, to get better outcomes, and to get overall better returns for the portfolio. So we find engagement and influencing companies and holding companies to account to where they are at in terms of their objectives and what they've stated in terms of their transition plan is very important. It's a very important objective we have as an investor. And it's also very important for those individuals working in effective areas and ensuring that there is there's an appropriate transition from those areas to other areas impacting obviously individuals and communities as well. So that engagement and advocacy is an important part of what we do. And as a large investor, we certainly use our size and our voice to engage directly with companies. The next question relates to, when investing in DIY with a 50-50% split between Aussie shares and international shares, if the current balance is split 50-50 and future contributions are also split 50-50, how often do you sell the shares to rebalance them to maintain the 50-50 split? So we don't have an automatic rebalancing process. But given that is a more specific, member-specific account question, we will follow up directly with that member to give further information on that specific topic, given it does relate to their specific investment selection in their own account. I think that's all for questions now. I'll pass back to Marianne.
Thank you, Brett. That brings us to the end of our annual members meeting for 2024. These are always really valuable sessions that we look forward to, and this one was certainly no different. Thank you for your attendance this evening. As mentioned at the outset, a record of the meeting will be made available on our website within the month, together with written answers to all the questions we've received from members, including any additional information we've committed to provide and answers to any questions we may not have been able to get to this evening. As I said, we deeply value our ongoing engagement with members, including through these forums, and we very much look forward to the annual member meeting next year. Thank you.